Dobar dan svima. Pošto smo izveštaj o inflaciji naše konferencije učinili rekordnim.
Ladies and gentlemen, esteemed members of the press, dear colleagues, welcome to the presentation of the February inflation report. I will first greet my associates, members of the Executive Board, members of the Council of the Governor, Mr. Stojan Stamenkovic, Mr. Kovacevic, Mr. Nikolic. I would like to thank them for our cooperation. I would also like to thank all my associates for making this issue of the inflation report even better than the previous issues. And then I also want to greet you, the journalists who are interested in the topics that we cover. To avoid any misunderstanding and mistakes, I will with pleasure present my associates sitting here at the table with me. To my right side is Mr. Željko Jović, Vice Governor. To my left side is Sava Jakovljević, General Manager of the Economic Statistics and Research Department. Next to him is Nikola Dragašević, General Manager of the Monetary and FX Operations Department, and to the far left is Mr. Milan Trajković, Deputy General Manager of the Economic Statistics and Research Department. To my far right and the only lady, other lady at this table is Mirjana Miletic, Head of the Analytical Reporting Division, and to the far right is Aleksandar Tomin, who is Head of the Analytical Division in the Economic Statistics and Research Department. Today, we will give you an overview of recent macroeconomic trends, set out our new inflation and economic activity projections, and explain our monetary policy decisions in the period since the previous report. Looking at the year behind us, I'm pleased to say that 2019 as well was marked by positive economic trends and prospects, despite the slowdown in global economic growth and ongoing trade and geopolitical tensions. This is first and foremost the result of an adequate and consistent economic policy that we are pursuing in Serbia. A policy which provided for the positive effects of many factors in the previous 7.5 years, contributed to the creation of a favorable business environment, and turned our country into an attractive investment destination. In this way, and in cooperation with the Serbian government, we supported a vigorous rise in investment, which sustained a 4.3% economic growth on average in the previous 2 years. At the very beginning, I will try to sum up the period behind us by sharing the following data with you. For 7 years in a row, inflation has been firmly under the National Bank of Serbia's control. In December 2019, it measured 1.9% year-on-year, which is also its average for the year as a whole. According to our latest estimate, economic growth came at 4.2% in 2019, exceeding all the projections released in the course of the year. After stepping up to 4.8% year-on-year in Q3, GDP growth accelerated still further in Q4 to 6.1%, exerting the largest impact on the growth of the Western Balkans region, as stated by the European Commission in its recent report. While many scaled down the growth forecasts of their economies, Serbia outperformed all the projections owing to the impact of domestic factors, notably higher than projected investment. In the past 2 years alone, fixed investment increased cumulatively by close to 35%, accounting for 3/4 of Serbia's economic growth. The non-performing loans ratio was cut to 4.1% at end December. This was a problem that we inherited, but which we addressed systematically, and owing to such an approach, the share of NPLs in total loans is now 80% lower than at the start of the implementation of the NPL resolution strategy. Goods and services exports remained vibrant in 2019, growing at the rate of 10.5%. This means that export growth was faster also relative to 2018, when it measured 9.6%. This places Serbia among the few countries whose exports grew faster in 2019 than in 2018. Gross FDI to Serbia hit its record high in 2019, 3.8 billion euros. Thus, Serbia attracted around 55% of all FDI that flowed in to the Western Balkans in 2018 and 2019. As of yesterday, Serbia also has a 12-year dinar bond, and we will work actively on extending the dinar yield curve in the period ahead. The demand for the 12-year dinar bonds of the Republic of Serbia was more than 10 times higher than the planned volume of sale, and the effective rate was 3.4%. In late 2012, the interest rate on one-year government bonds was 11.9%, whereas today the rate on our 12-year bonds is 3.4%. It is this difference between interest rates and the maturity of dinar government bonds that all the results in Serbia's significantly improved reputation worldwide are reflected in. Because only 3 years ago, on the 7th of February 2017, the rate on one-year bonds was 3.48%. Having increased by 30% in 2019, dinar savings are now 5 times higher than in 2012, when we started implementing the dinarization strategy. At end 2019 dinar savings stood at 79.6 billion dinars, while the latest data point to almost 83 billion dinars. I will now switch to the standard format, giving an overview of recent macroeconomic trends, our new inflation and economic growth projections, and our recent monetary policy decisions. Inflationary pressures remained low, even in conditions of strong economic growth and favorable labor market trends. In 2019 as well, we preserved low and stable inflation, which measured 1.9% year-on-year in December. By keeping inflation low, we have preserved the real value of household and corporate incomes, while making an important contribution to the predictability of doing business. That inflationary pressures are still low is also indicated by core inflation, which averaged 1.3% year-on-year in 2019. Low inflationary pressures are also confirmed by both 1-year and 2-year ahead inflation expectations of the financial and corporate sectors, which are anchored within the MBS target tolerance band. It is a fact that by placing inflation under control, we have restored confidence in the monetary policy, which now makes it easier for us to achieve results. Anchored inflation expectations enhance the efficiency of monetary policy and, by extension, the economy's resilience to external shocks. In our February projection as well, inflation will remain stable in the coming period, and will approach the target midpoint gradually, though it will most probably stay slightly below the midpoint until the end of the projection horizon. Acceleration of economic growth in Serbia is led by investment, exports, and sustainable consumption. The economic growth in 2019 exceeded our initial projections, which we revised upwards in the course of the year. According to our latest estimate, it amounted to 4.2%. Economic growth accelerated significantly in the second half of the year, reaching, in our estimate, 6.1% year-on-year in the last quarter. In the past half-decade, Serbia has been characterized precisely by the growth led by investments. Their impact on economic activity is unambiguously evidenced by the data on fixed investment growth at an average annual rate of around 10% during this period, whereby their share in GDP increased to around 24%. Let me repeat that fixed investments increased cumulatively in the past 2 years by close to 35%, accounting for 3/4 of Serbia's economic growth. An increase in their share to around 24.5% of GDP is expected this year as well, guided by continued implementation of infrastructure projects and private sector investment. One of the important sources of investment financing is also increased profitability of enterprises, to which the MBS continues to contribute through the achieved price stability and relative stability of the exchange rate, as well as through more favorable terms of financing. Companies are increasingly relying on favorable financing conditions for investment growth, as evidenced by the rise in investment loans of 25% in the previous year, with the balance of these loans higher by around 1 billion euros than in 2018. At the level of the year, almost entire growth in lending activity was due to investment loans, which, as far back as in 2015, emerged as one of the major sources for financing investment. In addition, owing to ordered public finances, the government is quickly increasing the level of capital investment, whose share reached almost 5% of GDP in 2019. Another important pillar of investment financing is the Fdi Inflow, which hit a record high level for the second consecutive year, reaching in 2019 3.8 billion euros. A particular quality comes from the fact that FDI is mainly channeled into tradable sectors and that it is project diversified, contributing thereby to the growth in our exports. For this reason, its full effects are expected in the period ahead. It is precisely the activation of earlier investment that helped maintain the high growth rate of Serbia's goods and services exports, which was even higher than in the previous year, 10.5% compared to 9.6% in 2018. And all of this happened despite the slowdown in external demand. I will repeat that Serbia is one of the few countries where exports rose faster in 2019 than in 2018. The investment cycle, which began in 2015 and which accelerated significantly in the past 2 years, is having a considerable impact on import dynamics and structure. Import growth in that period is mostly attributable to the economy's increased needs for intermediate goods and equipment, and partly to consumer demand amid conditions of citizens' rising living standard. Imported equipment boosted the Serbian economy's export capacity. Therefore, we expect to see high export growth rates continuing in the medium run. External sustainability is also confirmed by the full coverage of the current account deficit by the net FDI inflow, To be more precise, 113% in 2019 was this coverage, which is the fifth year of full coverage. The external position is further endorsed by the project and geographical diversification of both exports and FDI inflow, which we work systematically on, broadening our international cooperation. In addition, our economy's resilience to potentially adverse developments in the international environment is confirmed by the high level of foreign exchange reserves of 13.4 billion euros at end 2019, which is their maximum year-end level in the period since 2000, when data began to be monitored in this manner. The level of foreign exchange reserves is adequate in terms of both their size and structure. Increased production capacities and competitiveness of our economy were conducive to positive developments in the labour market. Owing to this, employment increased, while the unemployment rate decreased to a single-digit level. Since the beginning of the investment cycle, the unemployment rate has been halved from 19.2% to 9.5%, and formal employment in Serbia's private sector increased during the new investment cycle by more than 230,000 persons. At the same time, wages are on the rise, notably in the private sector, which in turn increases household consumption and supports the social component of growth. It is important to note that consumption is rising at sustainable rates. That is, consumption growth contributes to the sustainability of economic growth. Economic growth outlook remains favorable. Therefore, we expect similar GDP growth dynamics in the medium term of around 4% per annum, as in the previous 2 years. Good coordination of monetary and fiscal policies continues to provide significant contribution to economic growth and overall stability. Monetary and fiscal policies are extremely well calibrated and coordinated. The resilience of our economy is also strengthened by the maintained fiscal discipline in conditions of full coordination of our measures, with a constantly decreasing share of public debt in GDP. It is important to note that such result was achieved in conditions of significantly higher government capital expenditure. The general government deficit of 0.5% of GDP was projected in the medium term, ensuring the continuation of the downward path of the share of public debt in GDP. We are working systematically to improve the currency structure of public debt in order to lower the risk of change in the value of global currencies. The share of dinar debt rose to 27.7%, while the dollar portion contracted to 1/5, whereas several years ago the dollar debt accounted for 1/3 of public debt. The strategic introduction of the 12-year dinar bond, extending the dinar yield curve to 12 years, is or to be more precise, 12.5 years, is an important step toward deepening the dinar securities market. An important fact for the development of the domestic financial market is JP Morgan's announcement that Serbia had been placed on Index Watch Positive for potential inclusion into the reputed government bond Index Emerging Markets series. JP Morgan confirmed the positive outlook by assessing that activities which Serbia undertook in terms of adjusting its bond market to the best international practice have led to a conspicuous rise in secondary market liquidity in the past 2 years. This will additionally broaden the base of investors investing in the Serbian economy and bring Serbia into the ranks of globally attractive investment destinations. Thanks to the full coordination of monetary and fiscal policies, overall stability and implementation of reforms, Serbia is one notch below investment grade, typical for economies offering high security of investments. This is not only a confirmation of the economic progress and the results we have achieved, but also a contribution to the further improvement of financing and investment conditions in Serbia and a continued rise in employment and our citizens' living standard. Furthermore, owing to the effects of past monetary policy easing, a reduced country risk premium, low interest rates in the international money market, and higher interbank competition, the conditions of private sector financing were even more favorable in the fourth quarter. Our decisions translated fully into the credit market, and in late 2019, interest rates on dinar loans were cut to the lowest levels thus far, 4% in the corporate and 9.1% in the household sector. In regard to euro-indexed loans, financing conditions improved not only thanks to low interest rates in the European money market, but primarily owing to the sharp fall in the country risk premium, driven chiefly by the positive impact of domestic factors. The loan structure is such that lending activity also gives a full contribution to economic growth, owing principally to stepped-up investment borrowing by enterprises. Since mid-2019, investment loans constituted the bulk of corporate loans. The loan structure by enterprise size is also favorable, given that a major share is channeled to micro, small and medium-sized enterprises. The room for further credit growth was also created by a further reduction in the NPL share in total loans to the new lowest level of 4.1%. By preserving low inflation and financial stability and by actively using all instruments at hand, the National Bank of Serbia will continue to support vibrant, sustainable economic growth while preserving the fiscal equilibrium and the downward trajectory of public debt. The level of FX reserves and anchored inflation expectations will remain an important pillar of our increased resilience to volatile external conditions. Ladies and gentlemen, dear colleagues, my associates will present to you the results of our analysis of the factors underlying Serbia's risk premium. This will be a special text box. Global factors certainly play an important role both in the short and long run, not only for Serbia but for all countries. What is specific for Serbia and what has been shown and confirmed by our analysis is that the vigorous fall in the country risk premium is crucially determined by domestic factors, that is, by the strengthening of our economy. As confirmed by the analysis, the lowering and keeping of inflation at a low level and a vigorous fall in the NPL share, a reduction in the public debt share and other health indicators of our economy are the key factors why Serbia is perceived today as a low-risk country. Given that the risk premium does not reflect current developments only, but investor expectations going forward as well, we may conclude that investors assess that the achieved price stability and overall macroeconomic stability will be preserved in the period ahead as well. Allow me to conclude. The policies that yield results, good results, should not be changed. This is why we shall continue to apply a coordinated approach in pursuing economic policy, owing to which we have stabilized Serbia and are now making it stronger. This is taken into account and emphasized by the International Monetary Fund, other international financial institutions, rating agencies and investors. Our aim is to preserve stability, which is the pillar of a strong economy, by further strengthening the competitiveness of our economy and bolstering employment and the standard of living. I now give the floor to my colleagues from the Economic Research and Statistics Department to present our latest macroeconomic projections in more detail.
Zahvaljujem se guverneru i u nastavku konferencije predstavit ću vam Thank you, Madam Governor. We shall now present to you our latest macroeconomic projections and monetary policy decisions and the underlying domestic and international factors. Bolstered economic fundamentals lie at the core of the increasingly better outlook for our economy. We expect inflation to remain low and stable in the next 2 years and to gradually approach the target midpoint of 3%. Economic growth and a rise in the standard of living will continue on sustainable grounds. Domestic factors are expected to be the main drivers of growth amidst external risks that may act as a dampener. After hitting its record low in the past 10 years, the global growth is anticipated to gradually recover this year, despite the prevailing negative risks. They relate primarily to potential re-escalation of trade and geopolitical tensions, which marked last year. The coronavirus risk recently appeared as well and may affect global growth in the short run. In regard to growth in the euro area, our most important trade partner, the current projection assumes the growth of 1.1%, which is consistent with the latest projection of the ECB, in which growth for this year was revised slightly down. As in the previous projection, euro area growth is expected to accelerate to 1.4% next year. The expected growth in countries of the region, which are also our important trade partners, remained unchanged, owing to greater reliance on domestic demand, which we took into account in the new projection. As euro area inflation is expected to recover somewhat, the current projection does not anticipate growth in inflationary pressures based on import prices. Given the expected relatively slow global growth and muted inflation, conditions in the international financial market are likely to remain favorable. The ECB continues with quantitative easing, with markets expecting the accommodation to last longer than it was expected 3 months ago. Markets still expect further cuts in the federal funds rate, though such steps are not being announced for the time being, with the Fed's latest projections being at a lower level than 3 months ago. It remains uncertain to what extent the future moves of leading central banks will deviate from market expectations, which mandates caution because of the potential impact on global capital flows. Uncertainty in the international commodity market concerns primarily the global oil price, which was rather volatile over the past months. After rising close to $70 per barrel in late last and early this year, the global oil price fell to current around $55 per barrel. In line with futures, global oil prices are expected to remain unchanged from the previous projection. Given the instability of global supply and demand, shifts in the oil price are possible in both directions. Based on futures, we also made the assumption about the movement of prices of primary agricultural commodities, which are expected to rise somewhat less both this and next year compared to the previous projection. In contrast to uncertainty abroad, domestic factors are continuing to contribute to macroeconomic stability and sustainable economic growth, which underpins our projection. Even against the background of much higher government capital expenditure and increased outlays for wages and pensions, the consolidated budget deficit is smaller than planned in 2019, and the public debt share in GDP is on a downward trajectory. We assume that the fiscal policy stance in the projection horizon will be slightly expansionary without major upward pressures on inflation. The inflation projection rests on the assumption of a stable external position in the coming period as well, with a net inflow of FDI continuing to fully cover the current account deficit. Over 60% of FDI are estimated to be channeled to tradable sectors, with increasing presence of smaller projects, which, in addition to boosting the export potential, increase the country's resilience to potential external shocks. Balanced public finance and a stable external position of the country reflect on a further decline in the risk premium, contributing to relative stability in the FX market. Appreciation pressures which prevailed in the prior period continued, and the NBS intervened to mitigate excessive short-term volatility of the dinar against the euro. In Q4 2019, the NBS bought 808 805 million euros and sold 215 million euros in the FX market. On this account, FX reserves expanded by 2.7 billion euros at year level. Consistent with our projection are the still relatively low costs of government and private sector financing. The key policy rate cut was done 3 times last year to 2.25% in November, which is its lowest level in the inflation targeting regime. This monetary policy stimulus is being transferred to the real sector through more favorable financial conditions and further lowering of interest rates, which contributes to almost 2-digit year-on-year growth in loans, notably investment loans. Lower costs of financing are expected to continue to prop up investment and consumption and thus overall economic activity in the coming period as well. In the second half of last year, economic activity rose more than expected, pushing the annual growth to 4.2%. The key underlying factor were fixed investments, whose share in real GDP continued up to 23.9% in 2019. The growth in their share was also projected for the coming period to around 24.5% in this and the following year, owing to continued implementation of infrastructure projects and private sector investments, reflecting improvement in the business environment and favorable sources of financing. The investment cycle at home and the related increase in equipment imports will lead to the negative net exports contribution, though lower than in the year before, thanks to the activation of investments and the expected recovery of external demand. The rise in household consumption is also expected to continue on sustainable grounds, reflecting mainly positive labour market trends and lower costs of credit. Considering the above assumptions, the GDP growth projection for 2020 and 2021 was kept at 4%, except that the risks stemming from the international environment are assessed as asymmetrical to the downside and risks from the domestic environment to the upside, mostly due to a potential faster than expected rise in investments, as was the case in the previous 2 years. Despite the expansion in economic activity and positive labour market trends, inflation remained low and stable in 2019 as well, at 1.9% year-on-year in December. The inflation profile was largely determined by the unprocessed food and energy prices, which mirrored the price dynamics in the global market. Core inflation, which excludes the prices of food and energy, alcohol and cigarettes, averaged 1.3% at year level. Inflation expectations of the financial and corporate sectors, which continued to move in the lower half of the target tolerance band for both 1 and 2 years ahead, also point to low inflationary pressures. According to the February central projection, year-on-year inflation is expected to remain low and stable until the end of the projection horizon. By mid this year, it will move around the lower bound of the target tolerance band and gradually approach the target midpoint thereafter, driven mainly by the low base in vegetable prices in the short run and a rise in aggregate demand in the medium run. Relative to the November projection, the current inflation projection for 2020 is somewhat higher and almost at the same level in the next year, due to the higher rise in food prices in Q4 2019. Same as in the previous projection, the central inflation projection does not exceed the NBS inflation target of 3% in the next 2 years. Uncertainties surrounding the inflation projection are associated primarily with the movements in the international commodity and financial markets and, to a lesser extent, the rise in administered prices, the agricultural season and domestic demand. On the whole, risks to the projection are judged to be symmetric. Finally, let me briefly dwell on our inflation projection from a year before. As you can see, throughout last year, inflation moved almost fully in line with the central values projected and published in our inflation report in February 2019. We believe that such results bolster confidence in the NBS and help anchor inflation expectations. As so far, we will continue to firmly control inflation, since this is the best way to preserve the gained confidence and the efficiency of monetary policy while contributing to the country's economic growth and development. As before, this time we also have several text boxes, and the Governor will present some of them. I asked Sava to say, please just feel free to say that I particularly wish to emphasize that we have established the practice of having particular text boxes covering topical issues that are very important for our professional public. And this actually somehow motivates us to write particular text boxes on these topics. And this is the chance for our colleagues to address you and to cover some specific movements and novelties. This time we have 5 special text boxes. One analyzes the risk premium of Serbia and the underlying factors. I have already touched upon this topic. Mira will dwell on it. The second text box deals with the current reform of policy rates in the euro area, with a special emphasis on the Euribor reform. The third text box covers the dynamics and structure of fixed investment over the last 6 years. The fourth text box gives an assessment of macroeconomic movements in 2019, and the fifth text box assesses the importance of the base effect for the movement in year-on-year inflation this year. Mira, the floor is yours, and then colleagues can follow. Thank you, Madam Governor. Now we will present to you the results of the analysis of factors underlying Serbia's risk premium, as the Governor announced. If we take a look at the historic movement of Serbia's risk premium, as shown in these 2 charts that you can see, until 2014, the risk premium measured by MB was above the global risk premium, MB global, or that is the risk premium for emerging European countries, and as of 2014, it is moving below this level. What does this mean, in fact? It means that until 2014, investment in Serbia was considered riskier compared to the average of emerging economies, and until then, the risk is much lower. And currently, Serbia's risk premium is among the lowest in the region. The second fact that we wish to underline is that the country's risk premium has been continuously declining since 2012, and compared to the end of 2012, when it stood at 391 basis points, by the end of 2019, it was cut to 19 basis points. At the same time, MB Global was higher by as much as 11 basis points compared to 2012. MB Europe was higher by 41 basis points compared to 2012. What does this say to us? The decline in the country risk premium was driven by domestic factors at the first place. And aiming to assess these domestic factors, we conducted an econometric analysis, and the results of the analysis are shown in the following slide. The analysis was carried out especially for Serbia, based on a panel which includes Serbia for 6 European countries, which, as I said, includes Serbia. The results of the analysis show that there is an impact of global factors, but the importance of domestic factors is especially important as well. Among domestic factors pushing down the risk premium are the real GDP growth, a decline in inflation, a decline in the share of public debt in GDP, narrowing in the current account deficit in GDP, and a reduction in the NPL ratios. All coefficients variance along with these variables are statistically important, which unambiguously indicates that the reduction in external and internal imbalances and the resolution of the NPL issue and more favorable macroeconomic prospects of Serbia have contributed to the decline in the country risk premium, and they also contributed to more favorable financing conditions. Thank you, Mira. Now, Milan, could you take the floor and give an overview of macroeconomic developments in 2019 in your specific way, I would like to say, so in a concrete and concise manner.
Thank you, Governor. The next text box is devoted to the most important macroeconomic developments in the previous year. One of the key results is the fact that GDP growth last year measured 4.2%, whereby it exceeded the initial 3.5% projection and the revised projection of 3.6%. At the same time, the structure of growth was such that it did not give rise to any inflationary pressures, which is very important for us. After the 2.8% growth rate in the first half of the year, our expectations were, and this is what we stressed in these press conferences, that the growth would accelerate in the third and fourth quarter to around 4% or slightly over 4%. Instead of that, economic growth accelerated to almost 5% in the third quarter and to over 6% in the fourth quarter. The key driver of faster economic growth were investments, which reached the level of almost 24% of GDP, and their growth accounted for 3/4 of total economic growth, which was the case in 2018 as well. High investment growth took place because today, instead of one strong channel of investment financing, we have 4 strong channels. In addition to foreign direct investments, we nowadays have government investments, which reached almost 5% of GDP, and we have several times higher profitability of the economy, which finances investment directly. The fourth quarter, gaining in importance, are domestic loans. After resolving the non-performing loans issue, banks are approving more and more loans to the corporate sector, and this growth in corporate lending is almost entirely led by investment loans, which reached the level of 4.8 billion euros last year. On top of this, all foreign direct investments, which were high even before in previous years, stepped up additionally in the last 2 years. In addition to investment, the second driver of faster economic growth is export, which accelerated its growth relative to 2018. In 2019, exports grew at the rate of 10.5% and they reached the level of 23.4 billion euros. If we look at services only, we can see that the export of services reached 7 billion euros and increased by 15% relative to 2018. Within services, the exports of IT services reached the level of 1,422 million euros, which is an increase of 25% relative to 2018. This results becomes even more important if we take into account the slowing in the euro area economic growth and the EU import steel quotas. Without these unfavorable international circumstances and without the cost of 100% tariffs, GDP growth of Serbia in 2019 would be around 5% and our export growth rate would be between 13 and 14%. The third important element of economic growth, often debated in the public, is personal consumption, which continued to recover in the previous year and, according to our estimates, recorded real growth of 3.3%. This is the 4th year in a row that personal consumption is on the rise, but most importantly is that in all the years, including 2019, it grew at a slower pace than GDP, which is important from the aspect of sustainability of economic growth and overall macroeconomic stability. And lastly, investments continued to reflect positively on the labor market. Formal employment in the private sector reached the level of 1,600,000 people, which is by over 230,000 people more than private sector employment in 2014. You will hear more about investment in the previous 2 years in a separate text box, which will be explained by our colleague Alexander Tomin, who is here with us for the first time. I'm kindly asking him to be as normal as if there were no audience here. With his dedicated work, he has deserved a position at this table and a position in our Economic Statistics and Research Department. Thank you, Governor. When it comes to details regarding investment, we should primarily take into account the fact that the share of investment in real GDP increased from 17.5% in 2014 to almost 24% in 2019. Within that, both private and government investment increased. Private investment increased from 15% to around 19%, and government investment doubled from around 2.5% to around 5%. The greatest progress was made in the last 2 years, when investment in 2018 increased by 17.8%, and then in 2019 they increased by 14.2%. Finally, I will give you several details regarding foreign direct investment. In the last 2 years, foreign direct investment inflow amounted to 7.3 billion euros, of which, according to our estimate, 4.3 billion euros went into tradable sectors and 1 billion and 900 million euros into manufacturing. What's also very important from the aspect of sustainability of economic growth is the fact that most of foreign direct investment is channeled into, so to say, small projects. To be more specific, out of the 7.3 billion euros foreign direct investment in the last 2 years, around 4.5 billion euros was channeled into projects whose individual value is less than 50 million euros. Why is this important? This is a key factor which expanded our export base, and because of which our exports last year did not slow down despite the negative impact of external factors. And it is also a key factor why we expect our exports to continue rising at double-digit rates in the years to come. Thank you, Alexander. Nicola, you will present the text box relating to the reform of Euribor rates, but since in that text box we presented our view of the reform that is ongoing, I will now ask you to talk about a more interesting topic, which concerns MBS interventions in the foreign exchange market and an unusual conclusion that was derived. I'm talking about the conclusion according to which the National Bank of Serbia is stifling the foreign exchange market. I would like you to respond to these allegations.
Thank you, Madam Governor. I will start, as you indicated, with the process of reforms of benchmark interest rates, not only in Europe, but in the whole world. At the very start, I would like to say that benchmark rates are those rates used as the main ones in the majority of financial contracts, either loans, deposits in foreign currency, or contracts with financial derivatives. To illustrate this matter, those are Euribor and Libor rates. In the past period, after the crisis, they lost in their credibility because they were susceptible to manipulation. They were based on quotations instead on real transactions. To restore confidence of citizens and corporates in these rates and to restore their credibility and their applicability in other financial contracts, regulatory authorities across the world got together, and this process is still underway. They are reforming benchmark interest rates. When it comes to Libor rates for all currencies, the reform will last until 2022, but what we're interested in the most are the rates applied on the euro. These are Euribor rates, and EONIA. EONIA is applied to overnight transactions. And it still exists and will exist until 2021. Then it will be replaced by ESTA rate. Since the 2nd of October last year, it began to be issued. What is specific here is that EONIA is now calculated differently compared to the previous period. It is calculated based on ESTA rate plus 0.5 basis points. ESTA rate is based on realized transactions and not on bank quotations. A similar approach is applied to the reform of Euribor rates. They still exist and will continue to exist in the coming period. So what has been changed here? The methodology has been changed. We will not go into detail. The hybrid methodology is now in effect, and there's a realized transactions and not the bank quotations. In the past period, quotations were susceptible to manipulation of market participants. This process is still underway. We are looking at it, of course, since this can affect our market as well, and the National Bank of Serbia is prepared to respond adequately and to apply all recommendations issued by relative regulatory authorities from the euro area. And now the more interesting matter, if you allow me. This is an analysis published recently and concerns the potential impact of the National Bank of Serbia and its interventions on reducing turnover in the interbank FX market. We have to say that this is not true. First of all, if we take into account the last 10 years, the period since 2009 until January this year, for instance, the average turnover was almost balanced. In the interbank FX market, this is a turnover between banks, FX turnover. And if we exclude 2011 and 12, and I will tell you why later, so we will exclude them, the average turnover, daily turnover, equaled around 30 million euros. In 2020, in January, it equaled 13.9 million euros. Deviations in each of the year were almost minimum, and this is why it is much more relevant to talk about the average daily turnover than the overall turnover at the year level. Each day, turnover can differ by around 3 to 5 million euros. If there is a 5 million difference multiplied by the number of working days in a year, this is around 250, 252 working days, we reach the figure, we reach the difference of over 1 billion euros. And this is what gives, what makes people make a wrong conclusion. So the daily turnover is almost balanced since 2009 until practically today. We said that 2011 and 12 are excluded, and the main reason is the following. In the past years, we had the period of great uncertainty and great volatility of the exchange rate, and strong depreciation pressures prevailed. And when the governor came in 2012, the stability of the exchange rate received a completely new dimension. And in the last 7 years, we have a new normality, as we like to dub it. This is the period of relative stability in the FX market, and this contributed to the situation when banks today do not need to hurry up when they close FX positions resulting from their transactions with clients within the same day. They can wait for these FX positions to balance themselves on their own in the following days. In 2011 and 12, in the FX market, we had many speculative transactions, and this somehow boosted turnover. If we take into account the difference between the growth, the overall turnover in the interbank FX market and net turnover is important because it reflects the extent to which banks should trade in the interbank market so as to meet their and their clients' needs. So this difference was maximum in 2011 and 12, and the share of net in gross turnover in these years was around 30%. In 2019, it equaled 73%, over 70%, in fact. So this means that in the interbank FX market, we no longer have speculative transactions where banks trade with each other only to boost turnover and to make profit, which we call arbitrage profit, arbitrary profit. Transactions are carried out to cover transactions that they have with clients, these being domestic enterprises, non-resident investors, transactions in foreign cash, and other factors which we have emphasized before. It is also very important to highlight that the reduction in turnover under quotation marks in the interbank market is actually balanced. So turnover is balanced, and this was achieved against the background of rising FX demand and supply in bank transactions with domestic clients, and this is the most important factor affecting movements in the FX market. Constantly since 2013, we have seen an increase, a constant increase in FX purchases and sales by domestic enterprises. This means that economic activity is rising on the whole and the need for foreign currency. However, the supply of foreign currency is rising more, and it is closing the gap. That is the difference between supply and demand, meaning that a net demand by domestic enterprises for foreign currency is now much smaller, and it has been declining since 2010. So there is the need to close the gap is smaller in the FX market, and NBS interventions did not contribute to a reduction in turnover. They contributed indirectly to the stability of the system. They contributed to the fact that banks are now operating in a certain system where stability has no alternative, and that's why they're not hurrying up to close their FX positions. Thank you. I just have to add a very interesting illustration. We live at a time when the National Bank of Serbia does not deviate from its main mandate, this being the inflation target, to which the relative stability of the exchange rate gives a strong contribution. I have now to praise Vice Governor Dragana Stanic, who said that we are trying to make sure that the exchange rate remains in the lower left corner of the main page of the Political Daily. It should by no means hit the headlines about a rise in inflation or a worrying rise in the exchange rate. What Nicola said was encouraged by a well-intentioned observation published by Bloomberg, and it encouraged us to conduct a serious analysis and to say that it is not possible to interpret in a one-sided way figures and data, because the fact that banks now within their own turnover within a single bank are managing to meet FX demand and supply without having this tension to hurry up about closing their positions, although they still have limitations by their parent banks in terms of the openness of the FX position.
I consider this an additional success of the National Bank of Serbia achieved as of the 7th of August 2012 with interventions which were aimed at what is now reflected in the reform of ECB rates. This means that only actual turnover and realized volumes are the basis for assessing, for estimating interest rates, and the quotations, not only what we quote as demand, and whereby we inflate turnover figures. and when we actually present potential purchases as actual purchases. And this is an example that serves as an example that the National Bank of Serbia is always one step ahead of others. Very soon we will show how QR codes function in retail stores. We are preparing a nice presentation where you will see how we as a conservative institution are keeping pace with technology and are trying to secure the cheapest and the best quality payment services to our citizens through QR codes that will be verified by the National Bank of Serbia. So this is an event that I'm announcing with pleasure. Do you have any questions? Good afternoon, Natasha Achimovic. My question would be, can coronavirus slow down economic activity this year? Fiat recently announced that it suspended its production because of this. Yes, it can, but judging by last evening's news that Apple closed its shops in China and that there are many missing parts for production, all of this says that it can affect economic activity, but I wouldn't like to diminish the effects of what is happening right now. At the same time, I wouldn't like to exaggerate them. This falls within the scope of geopolitical tensions and risks stemming from the international environment. However, we all believe that the impact of the coronavirus will not be that huge, especially given the fact that Fiat scaled down its role in our exports. But we all hope, all of us in the world, that the effects of the coronavirus will be overcome as soon as possible. But it is difficult to assess to what extent they will impact economic activity.
Fonet, you said that GDP growth in Serbia in the coming period could be around 4%. We saw that in the past 2 years it was over 4%. Given the planned investment project and the investment of 14 billion euros, Serbia 2025, did you factor in the effects of this program or not? If not, do you have any forecast as to how this investment program could affect GDP growth? The answer is that we are a conservative institution and we always have lower assessments. And last year we were determined and we insisted on lower growth rates, and at one point we managed to convince the IMF not to lower the rate, and then we revised it to 3.8. We arrived at 4.2, and I sincerely hope that these rates will be revised upward, where all the time we somehow hold on to a balanced approach. We don't want to create excessive expectations in terms of growth rates and feasibility, by which everything not achieved would be somehow disappointing. And we always emphasize the upside risks in this situation as well. This risk does exist. For us as National Bank of Serbia, it is important that these growth rates are sustainable, and we are seriously assessing the effects of the sustainability of domestic consumption, this growth, and all tensions and risks from the international environment. And of course, each of these measures, plans are taken into account in our projections. So I hope that these growth rates will exceed 4%, but I I have to be open, as I'm always open. I will not be on the side of the World Bank. It said that it will be 7%, and then they lowered it to 3.2 or whatever. So consultants can do that. People who bear accountability for such decisions by the seriousness of the decisions and their reputation, and the National Bank of Serbia is an institution which has to be careful about this, and that is why we are conservative.
Gordana Filipovic, Bloomberg. My first question is related to the 6.1% GDP growth rate in the fourth quarter. What were the drivers of this growth? And the second question is, since we are nearing the end of the month and the government expected to announce the signing of the agreement on the sale of Komercijalna Banka to Ljubljanska, and you said several times that you're against that sale. You said that you wouldn't like Komercijalna to be sold. How will you vote? What will be your final position regarding this transaction in a meeting with the government? I will answer the second question, and the first question will be answered by Milan. I reserve the right to have my own position because in times when finance are the strongest weapon in the world, it is good to have your own bank, such as Komercijalna Banka, which has its credibility, its reputation, its potential, international presence, and at the same time it has a huge volume of savings, and it enjoys the confidence of citizens. So if it was up to me, the government would show that it can be a good owner of this bank, just as it has shown that it can put public finances in order, so that it now operates with a surplus and has the highest investment growth. So with certain mechanisms, this is possible. But I'm a governor of the National Bank of Serbia. I'm not a shareholder. I'm not a representative of the shareholders. I'm not on the side of the buyer. I am not the one to vote. I'm not the one to decide whether Komercijalna will be sold or not. And within the competences of the National Bank of Serbia and within the scope of my own authorities, all I can do is to give an opinion on the acquirer of shares. This is what we do in all consolidation processes and privatization processes. The decision is on the government, and my opinion is motivated by the reasons I have just described. My opinion as governor, I'm not a split personality, my opinion as an economist, as a woman who is to be 60 in March and who has experience with foreign investors, with the way domestic banks behave, but these banks have their parents abroad. I'm familiar with the ways they support strategic projects in the banking sector. So based on this experience, I, Jorgovanka Tabaković, governor, have the right to my opinion, and since I'm independent, I have the right to state this opinion, not expecting anyone to change their opinion because of my opinion or to be angry at me for saying this openly. Even though some people think that there is no democracy in Serbia, I claim that there is, and I state my opinion based on facts and on my personal view that in addition to Poštanska štedionica, which is a good bank and should continue growing, my view is that Serbia should have another state-owned bank. This doesn't mean I have anything against a private owner, against the Slovenian bank, because I don't. I don't think Serbia is less responsible owner today. I think that the government is much more responsible in financial terms than some larger states in the region, which is also proven by indicators that we are monitoring. Sometimes you don't interpret these indicators well, but this cannot change reality because economy is not an impression. Economy boils down to figures. I have justified my opinion. Milan, please, could you answer this first question?
You asked about the growth rate of 6.1% in Q4. Fixed investment was the main contributor. In Q4, our assessment is that they rose by 20%, giving the contribution of 4.6 percentage points to GDP growth. If we look at private and government investment grew by 17%, government by around 31%. The contributions are 3.2 percentage points private investment and 1.4 percentage points government investment. When we look at personal consumption, its growth in Q4 was around 3.5%. Contribution was 2.4. Government final consumption rose by 4.6, and the contribution 0.8. And net exports gave a negative contribution of minus 1.2 percentage point, and change in inventories of minus 0.5 percentage points. Do you have any other questions? If not, thank you very much for your attention. And may all other institutions be able to present their results in this way and with these associates. Thank you very much.